Good morning, everybody. Mike Tedeschi over at Perspective Wealth Planning with this week's market video. I got a lot to cover here in this week's video, so let's get right into it. First off, let's take a look at momentum. The McClellan Oscillator Index is a breadth reading, and we've talked about this a lot. And over the last few months, as the market has continued to push higher, under the surface, not as many names are doing it. And on the last 4 of the last 6 sessions, we've actually made a new high on the S&P 500, and the oscillator has held below 0. And the reason why I bring that up is when we look at those numbers going back to the 1960s, there's not a ton of instances, but it is very negative for the next couple of months. All right, if we take a look at the market 2 weeks out, it's only positive about a third of the time. Same thing a month and 2 months later, and the risk to reward is heavily skewed in the bear's favor. All right. Again, there's not a ton of instances of this happening. There's 8. So it's not a super wide sample set, but if you think about it, market pushing higher with less names under the surface doing that as well does make sense that you would see a weakness in the near future. And one of the things that we've been talking about here, and we have the S&P 500 up on the screen now, is bulls really needed to pay very close attention to what happened at and around those new all-time highs. The one thing that we did not want to see happen from the bullish perspective is us make a new marginal all-time high and then immediately reverse. And that's kind of what we just did yesterday after the FOMC, the Fed news came out. In the afternoon, the markets reversed sharply and closed at the low of the day and back under that all-time high from back in October. Now, it's still above a rising 10, still above a rising 20, still above a rising 50 moving average. Right? We didn't actually break anything yesterday. But if we see follow through to the downside over the next couple of sessions, yeah, we could actually break that uptrend that's been in place. You can see here RSI is back underneath of that 70 level. The MACD is starting to cross over as well here. So there's certainly a reason to be cautious and to pay very, very close attention to what happens up here. And this was across all of the indexes. Now, the Nasdaq is still holding above its all-time highs, right? And that's this white line right here. So again, nothing broke yesterday, but that is not good action. Kind of a bearish engulfing candle. We come in and we take a look at the Russell. We'll see it still did not get up and close over that resistance level that we have been talking about. So, continues to bang its head into this resistance zone, a rejection right from that yesterday. And if we take a look at the Dow Jones, we did not make a new high there either. And again, we zoom in right here, bearish engulfing candle, kind of right up at this important resistance zone. So, as we've been talking about over the last few weeks, we still need to be very, very cautious up here, really until we can clear and maintain and stay above those levels. When we need the Russell over 1600, that would put it over this line, and that gives it, again, it's still 8-9% away from its all-time highs at this point in time, but it would give it the ability to kind of make that push up. And again, we did not make a new high on the Dow Jones itself, and we would definitely need to see that happen if we're going to continue to push to the upside. Now, I wanted to take a look at oil in today's video. I think it's been a really nice rebound and a nice move here throughout the beginning portion of the year. But we run into a major resistance level, and that's what we've done here over the last week or so. This whole zone right in here is resistance, going all the way back to the previous year. And we got that nice move to the upside and pushed right into this resistance zone. So let me clear all these drawings so you can clearly see. Had a one-day breakout, immediately reversed it a couple of days later, and now it is sitting right there on that shelf. And that looks like this could potentially be a little bit of a bear flag type setup right here. And when we look at the moving averages, we now have price underneath the 10 and the 20, and the 10 is starting to cross down. Right, we have a little more weakness right here. You're going to have that 10 cross underneath the 20, and then you're going to have the moving averages flipped and above price, and that is usually not a good sign. We look at RSI, we got back underneath of that 70 zone and broke the RSI uptrend that's been in place here for the last few months. What happens to oil right here in this 60 to 62 zone is very, very important. All right, major resistance level going back a year or so, runs right into that, and it's making its failure right at that point in time. So we do need to pay very close attention. And we take a look at the oil services index. This was we looked at this a couple weeks back. You can see the last time that we had the lines here in on this chart as that potential breakout, and look what happened. One day above, doesn't hold on to those gains, and now we go from a breakout to a potential breakdown. A lot of times when we see a false breakout, it is met with a swift and hard move in the opposite direction. So that's what we're really watching for here out of oil and the oil services. Is this ultimately going to be that false breakout over 66, and are we going to head back lower? If we do, there is a number of levels of support that are in here from the move that we've had this year. Your first fib retrace level comes back in at that 57 zone, and that 50% retrace level comes in at that 54 zone. So those would be levels if you're looking for an opportunity to get in. If you miss this move up, those might be those first couple of opportunities for support if this continues to fall here. The takeaways from today's video is really we need to watch what's going on right here at this moment. I think this is a very, very important time for the overall market. We've talked for a while here about running up into those new all-time highs and the potential for us to have that false breakout failure right here up at those levels still remains intact. What we do over the next couple of sessions, I think, could have a big impact for where we are a few months from now. So we'll keep you updated. I'll see you guys all next week. Hope you guys have yourself